Hi, I'm Bill Brooks. I'm a CPA in Boulder, Colorado. Today I'm going to talk about offers in compromise. Offers in compromise are where there's a doubt as to collectibility. In other words, you don't have enough money to pay the tax, or a doubt as to liability. In other words, you doubt the amount that they say you owe. Now, you may be able to resolve this by just filing an original return and or an amended return, which of course would lower your tax and you'd be able to pay the tax. We're going to consider offers in compromise due to doubt as to collectibility today. There are three offer in compromise payment options: lump sum cash, short-term periodic payment, and third, deferred periodic payment. Now, there's a $150 filing fee unless there is a low-income waiver, and financial information statements 433A for wage earners and 433B for business owners must be submitted with the application. The IRS has 10 years to collect the tax. This 10-year period starts with the assessment date. That's the date the IRS receives your income tax return. Let's consider lump sum cash payment method. First of all, you must pay 20% of the offered amount up front. The offer amount is the realizable value of your assets, which, by the way, can include 401ks and IRAs, and the amount that could be collected on a monthly basis. Principal residence equity is exempt up to 20% of the value of your home. The amount that could be collected is the amount of your monthly income less your allowable expenses. Allowable expenses are your living expenses. Living expenses are housing, utilities, taxes, transportation, legal, such as child support and alimony, out-of-pocket health care, food, clothing, and other items. These amounts are mostly obtained from the U.S. Census Bureau and Bureau of Labor Statistics data. Actual expenses are taken if determined as essential by the IRS, such as prescribed medical care and prescriptions. In a lump sum cash arrangement, there are three ways to calculate the offer amount. Number one, if the offer amount is to be paid in 5 or fewer payments in 5 months or less, calculate the offer amount by adding up the amount that could be collected over 48 months and the net realizable value of assets. This period might be shorter if you have less than 48 months left in your 10-year statute of limitations. If more than 5 months are needed to pay, calculate the offer amount by adding up the amount that could be collected over 60 months or the time left in the 10-year statute of limitations if less, and the net realizable value of your assets. And third, if more than 24 months are needed, calculate the offer amount by adding up the amount that could be collected in the time left in the 10-year statute of limitations and the net realizable value of assets. Short-term periodic payment method. The offer amount is the realizable value of assets plus any amount that could be collected over 60 months or the time left in the 10-year statute of limitations, if less. Must pay, though, a payment with the offer, and regular payments must continue while the offer is being investigated. The offer must be paid in full within 24 months. A deferred periodic payment method. The offer amount is the realizable value of assets plus the amount that could be collected over the remaining time left in the 10-year statute of limitations. You must include an initial offer payment and regular payments while the offer is being investigated. This amount must be paid in full in 25 months or more, but within the time left remaining in the 10-year statute of limitations. Know we've covered quite a bit, but if you have any questions or if I can assist you, don't hesitate to call me. Thanks.